Welcome back to the channel, friends. In today's video, I want to share with you a couple of super investors, meaning really successful investors that manage major funds with billions of dollars under investment, and share with you what kind of stocks and portfolios they're having, what they're buying, what they're selling, and how their performance actually compares versus the golden benchmark, the S&P 500, and just see how they're doing. And maybe that can be inspiring for some of you, and maybe I myself can actually learn something from it, and maybe we can identify some stocks that keep on recurring in different super investors portfolio. And for that, we're going to be looking at investing.com, great platform for great free articles. And most recently, they actually launched the Investing Pro section, which is a paid section, but it really gives you great insights, similar to Seeking Alpha, slightly cheaper and slightly different in many ways. So I think it's also very interesting in case you find Seeking Alpha too expensive. Here, it is a little bit cheaper. And the cool thing is you get some really great ideas. And of course, what we want to be looking at some of the super investors portfolios, which you can also do over here, as well as the stock analysis, which I'll show in a second. So if you're interested in checking it out, then use my link down in the description below and you get up to 20% discount on your annual membership, which I really think might be worthwhile. And all that for around the cost of one Starbucks coffee in a month. So I really think it's going to be worthwhile. Right, so let's have a look. Obviously, over here you can see there's different filters that you can choose from. But in this case, I want to be looking at billionaires. Here you can change the holdings, the returns over time, but you can see already a couple of them being listed over here. Now, right away, you see the overall 3-year return that they've been having. Now, 3 years may not be that long, but still it gives you a good indication of how they've been performing. And in a second, we'll be comparing it to the S&P 500, but overall, you can see right away quite a stark difference in performance, with Warren Buffett being almost one of the top performers here with 52% return in 3 years, while KLIEN, another really big investor, actually returned a loss over a 3-year period, which is quite shocking to see, to be honest, which actually makes me a better investor than him, even though I don't have a billion to my name yet. But yeah, my returns over 3 years are definitely better than that. But at the same time, you still see people with overall slightly lower returns, while the best, MANDAL in this case, managed to return 68% overall. And you can see also right away the number of holdings, which is quite interesting. You see over here, one gentleman has the lowest with only 7 holdings, so that's really quite little, I would say, while one of the biggest holdings is actually held by George Soros with 130 holdings in their portfolio. So quite a stark difference in the way those investors organize their portfolio. So it just goes to show once again, there's really no right or wrong in investing. Each one has their own idea and strategy for the investments. But let's dive into some of those and see how they've been actually doing over time. So let's start off with the legend himself, Mr. Warren Buffett. I mean, I really love this gentleman. Definitely make sure you watch a couple of his videos. Really insightful. And the man is 93 years of age and still so much wisdom, so much wit and fun and energy. So let's have a look how he actually invests his money. And now obviously when we talk about Warren Buffett, what we're actually referring to is his company, which is Berkshire Hathaway, right? So it's not his own personal portfolio, but basically what he himself, as the fund manager, so to say, of Berkshire Hathaway, is holding in that fund, in that portfolio. And you can see, obviously, those numbers are not live right now, right? They always come a little bit delayed. You see here, that's a quarterly reporting period that they have to submit. The last one was June 30th. So this is the most recent as of recording today. And the filing date has been August 14th. So that's basically every quarter they have to file all the updates to the portfolio to the respective SEC authority, and then they will publish those changes over time. You can see over here, first of all, the holding summary, which obviously is a massive number of $279 billion US dollars. You see the quarter-over-quarter turnover, while the quarter-over-quarter value changed, so the total value of it actually dropped by quite a bit, by 15%. And in total, he is holding 41 companies in his portfolio, or Berkshire Hathaway portfolio. And the cool thing is you can see how the total value of the portfolio developed over time. If you go back to 2021, it was around $29 billion, still quite big. And at the peak time, it actually reached 363 billion, and now we're down to 279 billion. Still substantial, but it definitely dropped a little bit in recent times. Now obviously we'll come to this in a second, the reason why, but he has been selling arguably one of his best performing stock. But let's have a look how he actually performed with his portfolio versus the S&P 500, which in my eyes is the golden benchmark of returns in the market, which is also my favorite way of investing into an S&P 500 ETF. So over a 5-year period, he actually managed to outperform the S&P, which is nice to see, right? If you would have invested into the S&P, you would have had a 105% return, or you literally doubled your money in that period. Now, if you would have invested following his portfolio, or in his case, he managed to return a significantly higher return of 163%, or you would have more than 2.5 times your investments. Actually, really impressive performance, I must say, which is good to see, right? I mean, we talk about him as an investing guru and legend. So, that he managed to outperform the market, that's good to see, because in my channel, I've reviewed some other super investors who actually underperformed the benchmark, like many professional funds are doing, in fact. So nice to see that the legend himself, Mr. Warren Buffett, did manage to outperform at least over a 5-year period. That's the maximum we can see over here. And then we can go into some of the holdings he has. You see here right away, his biggest one in terms of portfolio size is obviously Apple, right? So Apple is by far the biggest now, with 30% still of his portfolio, even though he actually massively trimmed his Apple holdings. As you can see, he actually reduced his holdings by almost 50%. So now it's only 30% of his portfolio. Previously, it was significantly more. So he really trimmed back and cut a lot of his Apple holdings, which has been his best investment till date in terms of total returns. So that was really a big surprise, I must say, to really take so many chips off the table. And basically, he's sitting now on even more cash. So of course, the question is, what is he planning to do with that cash? Where is he going to deploy it? And does he know something else that we don't know? Well, probably he does. But yeah, that will be interesting to see where he will allocate that cash towards. Then, of course, he has some other holdings like Bank of America, quite a big one, American Express, so really financial services, which, yeah, I'm not the biggest fan of personally, but he seems to be. Coca-Cola company, still at almost 10%, a real strong dividend king that has been paying him a nice dividend over times. Chevron, some energy, Occidental Petroleum, another big investment for him. And then we come to some of the smaller holdings like Kraft Heinz Company, Moody's, and a couple of other ones. Personally, I'm not familiar with all of them, but yeah, here you see, if it's less than 1%, now obviously in terms of total value, it's still a big amount, but yeah, in terms of his total allocation, those don't really move the needle. I mean, if you see Formula One Group, if they double in performance, it won't really substantially make a difference to his overall portfolio returns. Yeah, you see here, once again, the sector concentration. He's mostly into technology, hardware, storage, peripherals, then a bit of banks, consumer finance, and very little in terms of consumer staples and distribution and retail, which probably makes sense given the high inflation rates and so forth. So, I totally agree with that. The money right now seems to be really concentrated in tech. So that's his biggest position, obviously due to his Apple holding, which is still a major part of his portfolio. And here we see some of the buys that he actually did make in the last quarter. And yeah, again, I'm not familiar with most of them, to be honest. Sirius XM holdings he added, but still as a total percentage to his portfolio, these are really small numbers, even though activity looks big. Since it's a small part of his portfolio, it looks bigger than it actually is. In general, he hasn't really added too much. Instead, he has really been focusing on reducing most of his positions, as you can see here, Capital One, even T-Mobile reduced by 10%. So some major sales. Snowflake, he completely closed. Paramount Global, he completely closed his position there. So yeah, his sales were really strong, and let's see what he does with all the cash that he's sitting on. But overall, honestly, well done. Really nice portfolio. Not something I would be buying myself. Again, I'll stick with the S&P 500 because obviously I'm not a professional fund manager. So I'm happy with slightly lesser returns, but still predictable, growing over time. But really, kudos to him to outperform the market, which not many people seem to have done. Right, with this, let's move to a gentleman who actually underperformed not just the market, but actually produced negative returns for his investors, and that's Carl Icahn. So let's dive into this. Right, so here we have the gentleman, Carl Icahn, American businessman and investor. And yeah, he also seems to be of a certain age, with 88 years old. So he's seen a lot over the years, but his portfolio also has in recent times. In total, he's still worth over 16 billion. So despite the drop in his performance, I think he can't complain of a lack of money. But still, overall, I mean, when we look at the performance, you see right away over a 5-year period, still, even 3 years he lost money, but over 5 years he's still down 7%. I mean, that's really staggering versus the S&P at 105%. So once again, doubled your money. Here you would have lost money, and that's really shocking to see, to be honest. And it's really strange to see how the total portfolio lost a lot of value over time, from 26 billion in 2019 now down to, 10 billion in 2024. So really not a very good investment, I would say. Interesting what he's investing in. Now, obviously, Icahn Enterprises, which makes up over 61% of his investment. So that's probably some umbrella company. If we go into this over here, yes, we can see right away Icahn Enterprises subsidiaries engages in investments, energy, automotive, food, packaging, real estate, home fashion, pharma business in the United States and internationally. So he has many different things in here included. And of course, you can go and see the performance over time. But yeah, here you basically see the issue, right? Over the last 5 years, that enterprise has not done well. I mean, that's actually quite shocking to see. You see here over time also net income to the company, a loss. Actually, we see that over here. So really not performing well at all. So I'm not sure what's going on there. I'm not really deep into that company, but just by looking at it from the outside, it really does not look enticing for me to invest in. Then he has a couple of other companies in here like CVR Energy, also not familiar with that, Southwest Gas Holding, another energy company, and yeah, then some other smaller ones over there as well. But you can see, overall, his biggest one is industrial conglomerates in terms of sectors, oil, gas utilities, chemicals, really no technology over here, which is really rather surprising, I would say. And that obviously also a reflection of why the performance has been so shockingly poor. So yeah, I don't know who is investing into that. Why would you be invested and stay invested for so long? Really interesting. Even though he's still a billionaire, I'm sure he's making good money. But in terms of investing, probably not a person that I would be following or putting my money towards. With this, let's move to another billionaire who actually had the highest return with 68% over a 3-year period. And that is Stephen MANDAL with 24 holdings. That's the gentleman over here. He's a hedge fund manager and managing director at Tiger Investments and is worth around $4 billion. So not too shabby, slightly younger at 68 years old, but obviously still knows his way around, and the numbers speak for himself. When we look at the performance, you can see here over a 5-year period, some really stellar returns actually. So over a 5-year period, he really outperformed the S&P 500 significantly. You would have more than 3.5x your money if you would have invested following his investment style, while the S&P 500 passively investing through a low-cost index fund, doubling your money in 5 years, I think is still spectacular performance. But yeah, his is certainly another level and really unique, even amongst other billionaire investors. So really kudos to him. And let's see what he's actually investing in. And right away, we can see, of course, Taiwan Semiconductors Manufacturing Company, TSM, makes up 8.5% of his portfolio. And of course, we know that's a real important company. They make around, I believe, 60 to 70% of all the chips in global circulation comes from that company. So really crucial, really powerful company that literally all other companies rely on to get their chips from. So I think that was a really smart investment. Then we have Microsoft, another tech-heavy company we're all aware of, one of the biggest companies in the world at one stage. Then we have Amazon, we have Meta. So you can see right away much more tech-heavy, tech-focused investment he's doing. Philip Morris, well, just to break things up and diversify, I guess, a little bit, kind of non-tech company. Then we have ASML. This is a Dutch company, one of the biggest companies in Europe that manufactures the equipment for those Taiwan companies and other companies to produce chips in the first place. So also very, very powerful company. Spotify, Block. So really you can see right away, I'm sure if you go to the sector breakdown, very, very heavy tech-centered software, 20%, semiconductors, semiconductor equipment, 13%, capital markets, financial services. Well, we know how tech sector has been doing over the last few years, right? It actually was the main driver also of the S&P 500 returns. Well, when we look at the S&P 500, in fact, we see a lot of the similar companies. Apple making the biggest part, then Microsoft, Amazon, Facebook, Tesla, all those companies are dominating the S&P 500. And in terms of sector breakdown, once again, software at the top, technology, hardware, semiconductors, those three have been the real engine and driver of the S&P 500 at large. And he seemed to have really doubled down on those investments, and well, he's bearing the fruits of it. Now, will that continue forever? Well, nobody knows, I guess, but for the foreseeable future, I can really see how tech continues to thrive. So most probably his portfolio will definitely do better than some of the previous investors we've seen who really invest more into more conservative sectors. And let's look at one last billionaire. Let's go with Bill Ackman, who has quite a tight portfolio with only 9 holdings. And he produced a 32% return over 3 years. Bill Ackman, actually quite a character, another hedge fund manager, probably one of the youngest of the bunch, but only 58 years of age. And his fund is called Pershing Square Capital Management. And he's almost more like an activist investor who really wants to invest into companies and turn them around and then later on sell them at a higher price. So yeah, really not a shy and silent investor, but really more aggressive, trying to change things. Right, so when we look at the total performance over a 5-year period, we can see, well, unfortunately, he did not outperform the S&P 500. With all the things he's been doing, all the actions he's taking, with the whole team he has, he still underperformed the S&P 500 over a 5-year period. So for me, who invests into S&P 500, that's actually nice to see and confirms my decision to keep on investing into S&P, because I don't want to have to deal with all the things he's doing on a daily basis. That's his full-time job to be an investor, and still he does not manage to outperform the S&P. So what makes me think that I would ever do? But let's have a look at some of the investments he's doing. And his biggest holding right now is actually still Hilton worldwide with almost 20%, so quite a massive holding over there. The second biggest, Chipotle, which is another restaurant chain in the US, spreading internationally. Then another one, Restaurant Brands International, 15%. And then only on fourth position, the first tech company over here, Alphabet, and then two other ones I'm not too familiar with. But yeah, when you look at it, hotels, restaurants, and leisure makes up more than 50% of his portfolio. So really quite surprising, right? And you see here tech or semiconductors hardly represented. And I guess that's part of the explanation why he actually underperformed the market over time, while the S&P is very tech heavy. He hardly has any tech in there. When we see what he was actually selling, well, he sold quite a bit. He reduced his Hilton holding by a little bit, but also his Chipotle holding by 22.5%. So really major correction over there. And interestingly enough, one of the few tech holdings he has, he also reduced by almost 20%. So for me, that was rather surprising. And he did add Brookfield Corp and Nike to the mix. Now, Nike obviously has been a little bit of a downtrend in recent times. So I'm sure his plan is to buy it on a low and then capitalize on rising prices in the future. But, for me, when I look at Nike versus some tech companies, yes, while I'm sure they will do better in the future, the price will increase again. I don't think they have the same prospect and growth opportunities in the future like some other tech companies. So for me, yeah, really quite interesting choices he's making there. So yeah, for me, it's really interesting to look at how different super investors investing their money. And while I don't really agree with some of them, ultimately they are still billionaires. I'm not. So I think it's always interesting to look at some people and just make up your own investment style, get inspired by some, and maybe, learn your own lessons of what to avoid and what not to do from others. I think it's an amazing way how we can do that. It's quite transparent these days. It's not some guessing around. It's really black and white. These are the investments they're actually making. We can follow them, not in real time, slightly delayed, but still, I think it's an amazing learning lesson. And if you want to follow along and even copy their investment portfolios into your own watch list, you can do this using investing.com Pro. I think the price for it is really justified. Check it out with my link down in the description below to secure yourself the best possible price, which you won't be finding if you go through the usual website. Well, for me, looking at those numbers, it just confirms once again I'm doing the right thing by investing into the S&P 500 because, a lot of those super smart people still can't outperform the market and S&P returns. So what makes me think that I can possibly do that? And that's why I'll continue to focus investing my money into the S&P 500 as well as two other investment classes, which altogether make up my 3-pillar investment strategy. And in this video over here, I'm going to walk you through my 3-pillar investment strategy and explain you how I allocate my money. Hope you enjoyed the video. Please give it a like. It helps the video to be seen by more people. As always, thanks a lot for watching. Stay healthy, get wealthy, and I'll see you in the next one. Ciao.